Is this sort of a year where China gets serious about de-risking, and do you see that playing out?
It is, and Heidi, coming back to your question to Liang Ting, I would point out that yes, property development is an obvious place where the Chinese central government will allow defaults to occur. But I would add to that the banking industry's structured products that are sold to wealthy investors are an easy target too, because those products contain leverage. And it's really leverage that the Central Committee is going after here. So that's where we should expect the defaults. And I don't see the defaults as necessarily a negative. They're a sign of an economy that's moving into the real world, if you will. It's a positive in some respects because it's a free economy. It's an open economy in some respects.
Opener,
it never
more open, I guess.
Never has been in the past.
Yeah.
And this is just an indication to us that the moves we saw 12, 14 years ago in banking, where healthy banks were rewarded by the government and poor banks were not rewarded or were hurt by the government, now we've gone the next step, and now we're entering into the shadow banking area. That's a positive.
What's your base case, assumption when it comes to China? And obviously, here in Australia, just so heavily exposed to the China growth story. I was just reading that a third of of Australian wine exports are actually now headed for China. So yes. Clearly, huge kind of codependence there. Is the assumption stable and steady as she goes, or a gentle moderation of growth this year?
It's interesting because I would argue that exports like wine feed into the consumption theme. And the consumption theme is at the core of the 5-year plan that we saw last year. But on the opposite side, a moderation in growth, let's say we get 6.3, 6.4 this year. That probably means a lower call on iron ore exports from Australia. So I think the Australian market is still wrongly assuming that high iron ore exports are going to continue throughout this year and next, and they are not. That's an area of the equity market where we really have to be careful at the moment because it's a selling opportunity.